WallStreetBets is back in the news with another crazy pump of another struggling stock. AMC has risen from around $10 a share to over $60 in the space of just a few days. You've no doubt heard about this over the last week, but for those of you who aren't quite clued up on what's going on, I'm going to briefly explain what's happening and what might happen next. So, to start off, we need to go back about a year, as the pandemic raged on. Movie theatres, or as we call them in the UK, cinemas, have obviously struggled. They were forced to close by the governments for months in some cases and entire years in others. They've missed out on a year of revenue that they'll probably never get back. Huge films like the new James Bond, No Time to Die, have been delayed time after time again. No Time to Die was supposed to be released in November 2019, then February 2020, then April 2020, then November 2020, and now finally it's due to be released in October of 2021. This kind of thing was seen all over the industry, with typical filmmakers unable to make, let alone release their films, as they had always relied on movie theatres and big blockbuster releases to make their money. Meanwhile, Netflix, Hulu, HBO and everyone else in the streaming sector had an incredible year as they capitalised on people being stuck at home and dramatically increased their customer bases, revenues and profits. But after a year of nothing but Netflix, people are getting seriously bored of sitting at home, and the reopening of movie theatres is widely expected to be huge. Amazon have bought MGM, the company behind James Bond, and traditional filmmakers are pivoting back towards theatres and the insane revenues they can bring. People are able to film again, investors' money is flowing back into the movie markets. And all in all, the movie sector is looking quite bullish right now. Despite that, a lot of these companies that trade in the movie sector have remained poorly valued, with AMC being one of them. AMC, for those of you who don't know, stands for American Multi-Cinema, and it is the largest movie theatre company in the world with over 1,000 theatres across the planet. The problem with them is that they have an awful lot of debt, and most people doubt that they will ever be able to return to pre-pandemic revenues, so investors have largely stayed away. That was until WallStreetBets got a hold of them. When Gamestop was going through its infamous pump earlier in the year, a bunch of other stocks got pumped a little bit as well. Blackberry, Nokia and AMC were among them, as they were heavily shorted and were valued relatively cheaply due to their poor circumstances. Basically, WallStreetBets found whichever stocks were most heavily shorted and decided to try and pump them up as much as possible. Most of this attention went to GameStop, so AMC, Blackberry, Nokia and the others saw little price spikes, but they promptly fell back down again. AMC, however, has been getting more and more attention recently, probably spurred on by a few things. Firstly, AMC decided to offer free popcorn to anybody who invests in its stock. The people of WallStreetBets obviously loved this, and it quickly became the most talked about stock on the subreddit, with their attention now firmly focused on AMC. And some people who actually know what they're talking about started to look into AMC with a little bit more depth, and they discovered a few things. They realised that AMC was a heavily shorted stock, but that a lot of the shorts might have just been synthetic, which means that the short sellers never actually borrowed the stock. Now, this is very illegal, and if a share recount is held, these synthetic shorts would be forced to buy the stock to avoid being caught out as synthetic shorts. The apes at WallStreetBets realised that AMC could be a brilliant target for a squeeze because there would be so much buying pressure due to the multiple different things and squeezes going on at once. Firstly, the share recount that is going on right now would expose the synthetic shorts, forcing them to buy the stock to close their positions, which would increase buying pressure and force the price up. Secondly, the subreddit's users themselves would be buying AMC at any price because they don't look at fundamentals, forcing the price up even further. Thirdly would be the short squeeze that would follow this. The short sellers who had placed legitimate shorts would still be losing money as the stock price rose, and they would be forced to exit their positions by buying the stock, pushing the price up higher again. Finally, the WallStreetBets users who gamble with call options, who have a bit of a higher risk tolerance, would be able to implement a gamma squeeze, where their brokers would essentially be forced to buy the stock to hedge against the options they sold, forcing the price up even further still. This immense amount of buying pressure is what forced the price up by over 600% in a matter of days, but a lot of people seem to think it can go even higher. Now, a bunch of people on WallStreetBets and even a few almost legitimate YouTubers have been caught up in this and seem to think that there is no limit to where this might end up. A number that seems to be getting thrown around a lot is $100,000 a share, which is what some of the more naive people who have jumped onto this movement seem to be parroting. To be perfectly honest, no one who has even a basic understanding of economics thinks that AMC stock will go from $10 a share to $100,000, so I'm not going to bother going over why that won't happen. What I will discuss though is what might actually happen from this point onwards. Firstly, there is the possibility that AMC continues to rise. It is really difficult to predict these kinds of things because they are based on public sentiment and how deep the wallets of WallStreetBets users are and the sentiment of investors. When the Gamestop squeeze happened, I had friends who had never invested a penny in their entire life ask me about it and ask if they should buy it as well. And that is one of the reasons GameStop went so high, because it became so mainstream. It was reported on by every major news network in the world, and millions of people who have never even heard of WallStreetBets or GameStop were buying into the pump. If AMC goes in the same direction and continues to be an interesting topic for the news outlets and continues to gain traffic, then it is absolutely possible that AMC continues to rise. GameStop went much higher than AMC has, so the precedent has been set. It is also possible, however, that AMC has hit its peak and will not go any higher. If this is the case, the most likely outcome will be a plateau for AMC, much like we saw with GameStop, whereby AMC maintains its inflated price for the next few months. But there are a couple things that could send the stock price plunging. When this happened before, an awful lot of people were sitting on an awful lot of cash because they were unable to go out and spend it. This time, however, most countries around the world have started to open back up and people's savings are being spent away. I'd not be surprised if far fewer investors flock to AMC compared to GameStop because they actually have other things to spend their money on this time. The second thing to consider is that the GameStop squeeze is still ongoing and there is a large die-hard contingent on WallStreetBets who consider AMC to be a red herring, a distraction, and want everyone to continue to pump GameStop. The community's polarized views on AMC will likely make this pump weaker than it otherwise would have been. Thirdly, there's also the possibility that there aren't any synthetic short sellers on AMC. While I think there probably are a fair few out there, it is possible that WallStreetBets just got it wrong and it will be unable to force a squeeze on these synthetic short sellers because they might not even exist. If that is the case, then I would expect to see a sharp fall in enthusiasm for this pump, leading to a drop in AMC's price. Finally, we need to consider what might happen if AMC's management does the right thing and continues to release and sell more shares. What a lot of people forget is that AMC is a real business with thousands of real investors and real employees. They need to make the right decisions to ensure that they are able to continue to operate in the future, and their extremely high levels of debt make this very difficult for them. If AMC fails to pay off its debt soon, it will likely be completely overwhelmed by it and would be utterly incapable of ever paying the debt off. This could cripple the business and cause its employees to lose their jobs and their investors to lose their money. The only real way out of this situation is for them to release new shares and sell them on the market to pay off the debt. Due to the ridiculously high price of AMC, they could actually do this and pay off all their debt, ensuring the future of the company. In fact, it's pretty much the only way to ensure the future of the company. The problem is that WallStreetBets only care about the stock price going higher, and releasing more shares would force the price lower. Releasing too many shares could cause the members of WallStreetBets to lose faith and give up on their pump, exit their positions, and leave the stock price to collapse. If this happens, anyone who bought into AMC over the last week will stand a good chance of losing all their money. So if you are thinking about buying into AMC, be careful and make sure you are aware of the risks. I hope some of you guys who weren't really sure what was going on with AMC before might now understand it a little bit better. And if nothing else, I hope you enjoyed watching the video. There will be more to come over the coming weeks. Thanks for watching. Until next time.